They say that price action is supreme in trading. Price action is most important in trading. Price action is God in trading. So I always used to wonder, if price action is supreme in trading, then why it doesn't work on stocks? Why it works very well on Nifty Bank Nifty, but it doesn't work so well with stocks? If I had done some back testing on stocks, you will see that most of the time price action doesn't work very well on stocks, but it works very well on Nifty Bank Nifty. So being a big fan of price action, this is something always haunted me. I always used to think that why it will not work on stocks, and after working for almost 6 months, after doing backtesting for almost 6 months, I came to know what is the reason for price action doesn't work well on stocks, and that is what I'm going to discuss in this new video. That is why I trade in small cap stocks. I'm going to discuss about the reason why price action doesn't work so well on stocks. And if you are a trader who trade in stocks, then what are the new changes you have to make so that you can take high probability trade. So that is the objective of today's video, where I'm going to discuss what are the advantage of trading in small cap stocks over the large cap stocks. There is a big myth in trading community. Many people say that you should not trade in small cap stock, you should not trade in small stocks, you should trade only in large cap stocks, you should trade only in stocks like Reliance, HDFC, ICICI Bank, all this kind of large cap stocks. But let me tell you, it is just a myth. With a small cap stocks, you can catch very high probability trades. And that is what I discussed in my new course, that is day trading strategies in stocks, where I discussed almost 10 strategies to trade in stocks. And most of the strategies which I discuss in day trading strategies in stocks are different than what I discuss in Nifty and Bank Nifty strategies. Here in the new course, we give lot of importance for volumes. We combine volume and price action and we take trades. When we trade in Nifty Bank Nifty, we focus only on price action. Here we focus on volume as well as price action. Coming back to the topic now, I made a small presentation on what are the advantage of trading in small cap stocks or the large cap stocks, and I show you the practical with the charts, and you yourself will see that how trading in small cap stocks can you give an edge over trading in large cap stocks. Let's start with this presentation on why to trade in small cap stocks compared to large cap stocks. So let us see the difference between large cap and small cap stocks. Most of the time, large cap stocks moves with overall market movement, more sensitive to overall market. What is overall market? Overall market means I am referring to Nifty Bank. What I mean by more sensitive to overall market, that means most of the time if you see Nifty is going up, then most of the time you will see that stocks also going up. If Nifty is going down, then you'll see that most of the time stocks also goes down. If you see that sometimes Nifty stays choppy, and you'll see that most of the time stocks also stays choppy. So that is called sensitive to overall market. Small cap stocks moves in more predictable manner irrespective of what Nifty or Bank Nifty do. But what I have seen with small cap stocks, it goes in a manner, in a predictable manner, whether Nifty is going up, sideways or whatever it is, it will go in a proper direction, up or down, whatever it can be, it is more predictable manner compared to large cap. Why is this large cap stocks? They are not predictable in movement because they are sensitive to overall market. Sometimes it happens that large cap stocks, you are trading in Reliance stock, it is looking bullish, and you take a long position and suddenly Nifty is coming down and suddenly it will also come down. Sometimes you see that Tata Steel is going down, you want to short it, and suddenly Nifty starts going up, Tata Steel also start going. So that is the problem most of the time happens when you are trading with large cap stocks. So if you are trading in large cap stocks, you have to be in tandem with overall market. If market is up, market is bullish, then only you should go with large cap stocks and take a long position. If you see that Nifty is going down, then only you should take a short position in large cap. But my question is, if you have to look at the overall market when you are trading a trade in large cap stock, then why you have to trade in large cap? Why you have to trade in large cap? Directly trade in Nifty Bank Nifty, right? You can directly trade in Nifty Bank Nifty instead of trading in large cap stocks if you have to follow what is overall market is doing. But when you are trading small cap, it moves irrespective of what Nifty or Bank Nifty doing. Nifty going up or Bank Nifty going down, whatever it is, it will move in a more predictable manner. That is what I've seen. while doing backtesting with large cap versus small caps. Statistics says 60% of volume in market are HFTs. HFTs high frequency trading, like algo trading, machine trading on higher on large cap stocks. 60% volume what you see in the market, it's a high FT, algo trading and machine trading. And especially it is high on large caps. Most of retail traders trade in small cap. Most of the time big moves comes because of some catalyst or news. Catalyst or news, that means due to some news you will see that some small cap stocks makes big moves, and news or rumors whatever it can be, most of the time only few people knows it, big players knows it, so they are taking market upside if there is any good news is coming. So we don't know being a small traders, right? So that is what most of the time it moves because of the news catalyst or some rumors. Whipsaws more in large cap stock because of big hedge funds, market makers can move stock few points up and down and make profit with their big trading account. Just imagine if there is a big market maker who have like millions of trading account, millions of trading capital, he will trade preferably in large cap, like highly liquid Reliance, HDFC, Tata Steel, right? Or Adani kind of stocks. So they prefer to trade in that kind of stocks. Why? Because they have millions of trading capital. So what they can do, they can place order for millions of order in say Reliance, and suddenly Reliance start going up and they will sell it. They will buy millions of order, buy position, and just few points it goes up, they can square up and they can make profit, right? Since they have big money, they can move market up and down. And we small traders, we can't do it. They have millions of trading account and they place huge order, and just few points, just 5 points movement, they can make profit. But they don't prefer small cap stocks. Why they don't prefer small cap stocks? Because of the liquidity, because small cap stocks doesn't have the liquidity like large cap stocks. So for market makers, he can't go and place a huge order in small cap stocks, right? So that's why this big hedge fund managers, market makers are go trading less active in small cap stocks because they won't risk in small caps due to liquidity issues. So that is why they don't come here. Most of the technical breakouts are fake in large cap. Most of the technical breakouts are real in small caps. Because most of the technical breakouts are real because it is traded by retail traders. When a retail trader sees that, okay, this is a small cap stocks, there is a big resistance here, he is waiting for the breakout. And once breakout happens, he'll take a long trade. And that is how market goes. But algo trading is a machine trading, right? Only human beings, we can see this. Oh, there is a resistance, it's coming near resistance. Once it breakouts, we'll go up. But that kind of patterns, algos can't see it, right? Algos are nothing but machine. And another thing is that most of the large cap stocks, big players, they go in and out within few points. Just few points they go in, few points they come out. Millions of quantity, they place the order. And this much points also they make profit. And once they book the profit, it comes down. And again it goes up, comes down. This kind of whipsaws are more common in large cap. But most of the technical breakouts are real in small cap stocks because most of the time it's traded by retail traders. Most of the large caps do not have circuit filter. You should know that circuit filter are not there in F&O stocks. Means some F&O stocks even can move 40-50% also in a single day. And if you don't have a stop loss, you know that what can happen. Your loss can be huge. But when you're trading small cap stocks, you have circuit filter like 5%, 10%, 20%. Every stock have different circuit filter. So that is like a safety net, right? So that means if you're taken a long position and suddenly it goes down by 5%, if you don't have stop loss, your maximum risk only this much you can lose, right? But in the F&O, it can keep going even 50% also. So that is why it is more risky actually large cap stocks if you don't have stop loss. Anyway, if you don't keep stop loss, risk in everywhere. But this is just for your understanding that at least small cap stocks have a circuit fee. Large cap stocks rarely make big moves intraday. Small cap have tendency to make explosive moves. And if you do some backtesting on small cap stocks, you'll see that how explosive move can be. Most of the time, breakout happens, suddenly it can go up in no time. So that is what small cap stocks have tendency to make big explosive moves. Now, things to remember while trading in small cap stocks. One thing you have to be careful about the liquidity and pits and dust. Okay, this is something very careful when you're trading small cap stocks. Just because you see a breakout doesn't mean that you go and buy it. Look at the liquidity. Liquidity means volumes. You have to see buyers and sellers. Never convert small cap stocks into delivery. Don't take intraday position into delivery. Many people have that problem, right? They take, suppose 100 rupees stock, they buy it, and when stock, instead of going up, it comes to 95. What they think that, okay, let me convert into delivery. Intraday they convert into delivery, and that many people do it, but don't do it when you're trading in small cap, because small cap stocks only for intraday. You never know the management. Most of the time you don't know what they're into, all this. So that's why it's risky to convert into delivery. Don't convert into delivery. Holding on to winners most of the time doesn't work in small cap. So be quick in booking profits. So that is what I've seen trading in small cap stocks from past few days. Also with my back testing, most of the time we have tendency that holding on to winner. If stock is going like this, going like this, going like this, we think that okay, we have to hold on to winners, and finally market close, we'll book our profit. But you should know that most of the time small caps have explosive moves, gives like this, and then it goes and sideways. So if you don't book your profit, then you see that your profit is going up. So that's what my advice is. If breakout happens, suddenly it gives big move. Quick in booking the profit, holding on to winners doesn't work in small caps most of the time. Opening and late afternoon trade works here most of the time. Compared to mid afternoon, opening and late afternoon, most of the time it gives big moves. Make a separate watch list for small cap stocks and focus on it. I'll show you my TradingView account, and I'll show you that how I do a watch list for small cap stocks. Either you need a good scanner or have to spend time previous night on finding small caps which are near the important support resistance and put an alert. So there are two ways. One is you can go for some scanner which can give you live market scan and tell you which are the stocks under your criteria, or you can go through your TradingView or any charting platform and look for small cap stocks which are near the important support resistance. For that, you have to put some effort. You have to put some effort previous night in finding stocks which are near the support resistance, and that you have to do regularly every night and put a alert. All you make stocks move, so have good knowledge about understanding volumes. You should know that stocks moves based on volumes. So you have to have a good understanding about volumes. You have to have good knowledge about volumes. That also I discuss in my new course, day trading strategies in stocks. And also you have to have a good knowledge on market. So these are the things you should remember when you're trading in small cap stocks. Now what I'll do, I'll take you to my TradingView account and I'll show you my watch list, how I segregate the stocks based on watch list, and how I keep it in my radar, and whenever it meets my criteria, it gives me alert, and then I take the trade. So let me take you to my TradingView account now. Okay guys, now you can see that this is my TradingView charting platform, and if you go to this drop down box, you can see that I have segregated stocks list. First one is in the Nifty F&O stocks, and next one is Nifty 500. Nifty 500, here both F&O and large cap, mid cap. Here in small cap stocks, you will see mainly small cap stocks. So these are the numbers you'll see, and then you will see one red list. What is this red list? This is the list I have created. There are total 31 stocks in my radar, which is in my watch list, where I'm looking for the opportunities while trading in stocks. So how I do the segregation? That segregation based on intraday charts plus daily time frame charts. Intraday charts, for that, when market is open, you have to look at the volumes and price action, and you have to look at the daily charts. You have to combine both. But now market is closed when I'm recording this video, so intraday charts will not be there, but you can see the daily time frame charts. And let us go to that red list and let us see what are the things I look for. For example, this is the red list. These are the stocks which are in the red flag. That means these are the kind of stocks which are near the some important support or
resistance or it is moving on big volumes or something like that. Now, for a moment, go to first one. Minda Limited. We never heard of this company, right? That's what I was saying you that small cap stocks, most of the time, you must have never heard the names, but have the tendency to give big moves. So this stock, look at this in the strong uptrend, and now it is getting accumulated at around this price. 584.35. What I'm seeing is that there is a resistance, there is a resistance, there is a resistance. So what I have done, I have put an alert. Can you see the alert logo here? Yes, that you can put it in trading view. So when you go to alert, it will show you that what level it will give you the alert. It will pop up the sound once that level has been broken. So that is what the alert. So tomorrow or Monday or whenever market opens, if it breaks this, then I look at the volumes also. If both are supporting me, it's breaking out and volume also giving me, then I'll go to smaller time frame and I look for my price action setup. If everything is matching, then I'll go and take my trade and I'll keep my stop loss. So that is just for your information, because there are 10 different strategies we discuss in our course. This is just for understanding for this video. This is another stock, Suven Pharmaceuticals. Even this is unheard of the company, right? It's not a big company like Sun Pharmaceuticals or Cipla and all these. Small company. What is telling me that every time it comes here, it is taking the resistance, right? And look at the wicks. Every time wicks is making resistance here. So that means it is due for a breakout. And look at where actually it is facing resistance. That is something called big round number, 500, around 500 rupees. Suven Pharmaceuticals is facing resistance. So I put the alert, and once I see the chart on the smaller time frame like 5 minutes chart or 1 minute chart, and if it is meeting all the criteria, then I take the trade. This is the Rail Vikas Nigam, RVNL, another small company, right? What I'm seeing here again, same consolidation. More than that, I'm looking at this. What it is showing you that volume for last 8-10 days higher than what the volume you see for the last one or more than 1 month, right? And it is stuck here. So it is looks like volume breakout. This is another company called Prism Johnson. Even this company also no one heard of. So here I put Windows. Here I put these two lines. This is called Windows. In our course, we call this as Windows. What is the Windows? Windows means space between two resistance. Most of the time, if this breakout happens from this level, most of the time it goes and takes resistance immediately to this level. That is called window in our terminology. So why is this window? One is this resistance. Second is, if you go to the left, there is another resistance here, right? There is another resistance here. So that's why I have marked both the resistance. So if I see the breakout with volume also good and it meets my price action setup, then I would be interested to taking the trade for target of this. And what interesting you see here, all these are unknown names, right? Most of the stocks, look at this. All the names you must have never heard of, most of them. So that is what the potential of small cap stocks. So that's what I wanted to discuss. Potential of trading in small cap stock versus large cap stocks. And in small cap stocks, I've seen most of the time breakouts are real. Unlike large cap stocks, most of the breakouts are fake. Most of the time, breakouts are real. So that's why I like trading in small cap stocks compared to F&O stocks or a large cap.
So guys, you have seen that how trading in small cap stocks can give you edge in trading compared to trading in large cap stocks. So that is why my suggestion is do some back testing and you yourself will see that small cap stocks have a lot of potential in trading even compared to large cap stocks. That all I discuss in my new course, and also I discuss 10 strategies how to trade in stocks. Along with this course, my other course, that is day trading strategies in Nifty Bank Nifty, which I conduct on every weekend, that I am still conducting. If you are a trader who don't trade in stocks but trade only in Nifty Bank Nifty, then you can join my weekend webinar on trading in Nifty Bank Nifty, where I discuss almost 15 strategies to trade in Nifty Bank Nifty in day trading. You can see the link below this video in the description section, and if you are interested, you can join this weekend. Other than that, I have other courses like option strategies made easy, and also have swing trading course for people who are into full-time job. So that's it guys, and very soon I'll come back with a new video. Until then, bye and take care.